Shucks. Good evening, everybody. Kamari Ellis here. You are watching a special edition of the Finance Rebel Show. The Finance Rebel Show is all about helping people empower themselves and increasing their financial IQ. If you don't know who I am, I'm Kamari Ellis. I am the Finance Rebel. Be sure to share, like, and comment on these. And today I decided to jump on real quick because I've gotten a lot of questions about the coronavirus. Excuse me. Well, I shouldn't say the coronavirus. I've gotten a lot of questions about the Fed Reserve's response to the coronavirus because today they had an emergency meeting and they cut interest rates. And oddly enough, I got a bunch of text messages and inbox and DMs asking me, is this a good thing? And so I'm going to come on and I'm going to address a couple of things. I know one of the questions, I'm just going to throw it up there now. Do I have it up there? One of the questions was, is now a good time to buy a home? Well, we actually talked about that last week, right? After we saw all the other action from the Fed Reserve last week and actually the week before last. And so what we saw today, let's just back up, right? What exactly is the Fed Reserve? Because there's a lot of confusion about that as well. So the Fed Reserve is basically the central bank of this country. And what they do is they monitor the economy and the currency in the country. And they basically make sure everything runs smooth. Now, before the Fed Reserve was even created, basically each state kind of had their own kind of currency. So I live in Pennsylvania. So Pennsylvania might have the Quaker as a coin or a dollar. New Jersey might be, what's New Jersey? New Jersey is the garden state, right? So they might have a tomato symbolized on their currency, right? But each one of the states had a different currency. And oftentimes when there was any kind of scare or panic, there would be major runs on the bank, forcing those banks to go out of business. And so what they did was they decided to create a central bank. Now, there's a lot of speculation about how it came about. Was it shady? Was it the Rothschilds that are doing it to manipulate the world? I don't know. I don't focus on that. That happened supposedly back in 1913, I want to say. But right now, what they do is they provide liquidity for banks. So, again, and I kind of went over this before to kind of go over, but I'll go over it again, right? We have a fractional banking system here in the United States. And what do I mean by a fractional banking system? So I take my money to the bank. Let's say I put $100 in. And when I put $100 in, the bank then transmits that money over to the Federal Reserve because they keep track of it. However, the Federal Reserve does not require the bank to give them that whole $100 that I gave them. They only require, let's say, $30. And then the other 70, they're able to do things, leverage, give loans, do various other programs, and it creates leverage within that system. Okay, so what happens is a lot of times when people get spooked, like I talked about earlier, like back in the day, they tend to take their money out of the bank, and so when you take the money out of the bank, it puts a lot of stress on the system. And so if you put a lot of stress on the system, sometimes banks can't function properly the way that they need to. And so in current day, 2020, right, we are seeing the Federal Reserve get involved because of coronavirus, because we are potentially seeing some economic slowdown. All right. So we're seeing some economic slowdown. People are getting scared. Now, one thing people don't realize why liquidity in the banks is so important is because every big company that hires or rather employs a lot of people typically run their payroll on a line of credit. So they might not, let's say their payroll is $1 million every 2 weeks. Well, they might have sold $1 million, right? They might have $1 million in the bank, or they may not. They might be a little short. But the fact that they have $1 million in the bank, they don't necessarily want to use it to cover payroll. So what do they do to cover payroll? They use their line of credit. And then when the money comes in, they pay that line of credit off. All right. So when you think about that, and you hear people talk about liquidity in the markets, that's essentially what they're talking about. They're also talking about people being able to withdraw their money when they need to, but that's kind of at the crux of why the Federal Reserve is injecting stimulus into the economy. When I say stimulus money, they're putting money into the economy. So there are no hiccups because we're seeing a lot more slowdowns and shutdowns and quarantines with COVID-19 here in the United States. I know my children are, they've been sent home from school. School's gonna be closed for 2 weeks. In my county, there's basically like a shutdown. They don't want anybody going anywhere for anything non-essential. So basically, a lot of the stores are closed unless it's an essential need or an essential item that they're going out to get. So just keep that in mind as I go through and answer some of these questions that I got today. Chili Davis, how are you? Mr. Mystery. That's a dope name. Thank you for your service. Well, thank you for watching. And that's coming from YouTube. All right, so I got some YouTube people on. Down to 1.25. Actually, interest rates are down to 0 now. So the Fed Reserve lowered interest rates by 100 basis points, but in regular people's language and lingo, 1%. So 100 basis points is basically 1%. Right. Repo markets are going crazy. I don't want to talk about the repo markets. That's a little bit more very technical. But repos are basically how banks loan money to other banks. I'm not sure what that means. Exactly everybody on the line of credit, $1 million drop in the bucket for a business salary cap. Yes, that is true, Jilly. Very true. So the Fed dropped by 100 basis points. They just dropped interest rates less than 2 weeks ago by 50 basis points or 0.5%. So the Fed has dropped interest rates by 1.5%. Now I got some very, very interesting questions today. So, that's what I wanted to talk about. To kind of, give some answers, to give some, to help people work through this, right? And I mean, interest rates have cut before. I've never seen these kind of questions, but it's all good, right? So here's the question. Since the Federal Reserve cut interest rates, does that mean I don't have to put money down for a home purchase? Incorrect. The Fed funds rate is tied to mortgage rates, but that doesn't mean that a bank is not going to require a down payment. I'm not a mortgage person. I just had Mr. Robert Lewis on the other day talking about mortgages and what the Fed did the other day. But now it's a new day, so we're talking about it again today. But now, typically, unless there's some kind of home buyer assistance program, or maybe the seller might offer you some kind of seller's assist, no, you still have to put money down on your home 9 times out of 10. Okay. So here's another question. Since the Fed Reserve cut interest rates, will this cause a recession? So I thought this was an interesting question. So I wanted to take a moment and talk about what a recession is, and that's not going to work. What is a recession? Basically, a recession is when the economy, right, when the economy declines for 2 quarters or more straight. So right now we are in the second quarter. We probably didn't see any pullback in services or the economy in the first quarter, but we are now in the second quarter. We will probably see a decline in the second quarter GDP or second quarter economic activity for the United States. Actually, you'll probably see that globally. So if we see the second quarter and the third quarter decline, then we'll be in a recession. Now, rate cuts don't necessarily signify being in a recession. However, they're seeing a potential recession on the rise, and they want to make sure they get in front of it. To again, not make people panic, not make people basically sell the farm, because during a recession you'll see Unemployment will increase. Stock market usually drops. We're seeing the stock market drop now. Unemployment's still pretty high. There are less jobs available, right? There's less hiring. And then so people, again, they get a little, or sometimes a lot concerned and a little scary. I mean, we got people out here fighting in these streets over Charmin. I mean, folks are squeezing the Charmin and they get in full-on brawls over Charmin. So, again, that's pretty crazy about what's going on out here right now. But, I we'll probably have a recession. We haven't had a recession in quite some time. I mean, we've been running strong as an economy since 2009 when we had the first rebound. So, you're going to have ups and downs in your economic cycle. You're going to have people, you're going to have things. It's just like anything else, right? You're going to have different seasons in your economic cycle. Yes, we are at 0% interest rates right now. And so that 0% gives the banks a lot more flexibility when it comes to lending and making things happen for the individual and their personal bank holders. All right. So let's see. Here's that question again. Is now a good time to buy? Well, me and Robert talked about that last week. Is now a good time to buy? It's a good time to buy if you can afford it. If you can afford to move, if you have down payment money, your credit's good, you can afford the new payment, it's a good time to buy. Potentially, right? You never know what's going around the corner. You never know what's going to happen. But all things being said, if you can meet those check boxes and you want to move, right? You don't have to move, but if you want to move, then yeah, now's a good time to move. So that just all depends on, what your personal preference is and what you're trying to do. I will say this. A lot of times we get caught up with trying to keep up with the Joneses. And a lot of times we want the big house just so we can kind of show off. Don't be those kind of folks, because 9 times out of 10, you're going to lose money. And it's really, really hard pressed to get it back. All right. So, again, there's nothing wrong. There's nothing wrong with having a nice place, right? What's wrong is living beyond your means. And there are a lot of people that like to live beyond their means just because they're just trying to be fly and flashy. But in the long run, that never works. That never helps. Especially if your overall goal is to be wealthy and leave something behind for your children and your children's children. So just keep that in mind, right? Again, going back to 2008, I talk about 2008 a lot because that was the last major economic event we had, mass negative economic event we had. But why was that really started, right? You had a bunch of greedy dudes at banks because they knew that people wanted to keep up with the Joneses and they wanted big homes. They call them McMansions. People started defaulting on those homes. The banks couldn't keep up with it. These quote unquote geniuses on Wall Street created all these exotic type systems to short the market. And then they basically collapsed the market and the Fed had to step in and some banks went out of business. But again, a lot of this is predicated on people wanting to show that they actually have more than what they have. All right. So it's now a good time to buy. Also, actually on my page right now, there is on my IG page, and I think there's one on my Facebook page. There's definitely one on my YouTube page talking about that. It's like a 3 or 4 minute clip with me and Robert. So you can check that out there. And Robert did an excellent job of laying that out. All right. So we hit the home purchase. We hit recession. There was another question. I didn't get a chance to put it in queue, but I was asked, will a person's interest rate drop now that the Fed dropped? And I think that might be on my personal Facebook page. But the Fed cutting rates right now, that has nothing to do with the mortgage you have or credit cards that you have outstanding right now, unless you have an adjustable rate mortgage and its benchmark is tied to maybe the 10-year or something like that. But usually it's LIBOR. It's usually something like that. So, the 10-year being cut won't change. Won't change your interest rate on your mortgage or your credit cards right now. Now, I had a couple questions on IG I'm gonna try to get to real quick because I told you I ain't staying up with you all night. I was tired. So bear with me 1 second. So here we go. If my current mortgage interest rate is 4.62, do you I think you're saying, do you think I can get a better interest rate with the rate cut? Well, I don't know what your credit score is. Or does it depend on your FICO score? Yes, it absolutely depends on your FICO score. Absolutely depends on your FICO score. Your credit is going to matter when it comes to you getting a mortgage or a refi. And I think Robert was on. I don't know if he's still on. He could chime in. Robert said you should start to think about refinancing when interest rates are at least 50 basis points lower, or at least a half a percentage lower than what you're currently paying right now. And also factoring in fees and things like that. Once you start seeing that, that's kind of the sweet spot for you. But check with Robert. And I see he is on. So everybody check with Robert Lynn to USA. He's my guy I turn to for all my mortgage questions. All right, Rico. Hey, George. Let's see, because I know some of these. Okay, Robert said settling at the Fed cuts affect short-term lending. Yes. Home equity lines of credit cards. It does, but if it's already locked in, it's not going to change. And it usually doesn't change that fast. Ms. Parker. Oh, DJ Grimm, how about that? The Q Connect. Oh, man, I feel honored. Kiana's on. What's up, Ern? All right. Anybody else got any other questions? So here's one. So this is a good time for home buying. If it's good for you, it is, right? Comedic, Elijah. What about everyday people and everyday expenses? What about them? I'm not clear on that. I'm not clear on that question. Chime back in, winning motivation. Is this a good time to refinance? Yeah, I just covered that. Dusty, Darius, how are y'all? SLFX Trading, how are you? Melanation, how are you? I Deliver Beauty, how are you? And I got a couple of questions, it looks like, over here. Hold on with me 1 second. All right, so Chili said exactly everybody's on a line of credit, 1 million drop in the bucket for a business salary. Oh, I think I had that already. Sorry. What should we be focusing on? Well, I will be focusing on staying calm, one, right? I do believe, and this isn't to invalidate anybody or anything, I do believe Corona is a bit overhyped. The media is having a field day with this. The media loves to drive mass hysteria. You know the saying, if it bleeds, it leads. So this bleeds, and so it's leading, and it's got a lot of people in an uproar. And so what I would be focusing on is, I've been telling people now's a good time to start looking to invest if you haven't been investing already. Y'all been seeing, I've been talking about that a whole lot. You only need $1, $1 to invest, to start your investment journey. 4 quarters, 20 nickels, 10 dimes, 100 pennies. That's all you need to start investing. You can use apps like Cash App, Robinhood. There's a few others out there on the market, but I would just say start. So Bird Fred says, will this affect mortgage rates? Yes. In the long haul, it will affect mortgage rates, but not the mortgage rates you already have established, right? I think we saw mortgage rates drop to 2.97% on an FHA loan last week when me and Robert was on. Double check that, right? Just Google 30-year mortgage rates on Google, 30-year mortgage rates, and you can find it. Matter of fact, do me a favor, somebody do that and put it in the comments. Saeed, how you doing, sir? with Nike and Apple sitting down or shutting down temporary. How would you look at that? I would look at it as a temporary shutdown. Warren Buffett just said he thinks Apple is the best run company in the world. I would probably agree with him. I've been on record. I've said Steve Jobs was probably the greatest CEO of our time. And the current CEO is pretty good. I can't think of his name off the top of my head, but he's been he was with Tim Cook is his name. Tim Cook has been with Steve Jobs for at least a decade and a half. And Jobs has been dead for quite some time now. So yeah, I'll be looking at Nike and Apple. How would I look at them? So think about it like this. Anytime you are buying a business, a stock, anytime you're buying a stock, you are buying a business. Now, I always give the disclaimer. My show, what I talk about long-term investing, because most people that get into the markets have no clue about the markets. They've never studied them. They haven't really done any investments in them except for maybe in a 401k. And so I always say start slow and steady. And so I say focus on the long term. So in the long term, let's ask this question. Will Nike or Apple be out of business in a year? Does anybody believe Nike or Apple will be out of business in a year? I personally don't believe Nike or Apple will be out of business in a year. All right. So I look at how good the company is. I look to see if, again, if it's a good company, how well it's run, how much cash they have on hand, how do they make their money? See, a lot of times people buy stocks for the long haul and they don't even know how the company that they just brought makes money. That doesn't make any sense to me. All right, so you want to at least know it, right? So y'all been seeing, I've been talking about Ford a lot. Ford pays a great dividend. How does Ford make money? It makes money off of selling cars and also financing their cars, right? But their ecosystem, how they make money is around the car. Long term, what do I think about the automobile industry? It's going to change, right? We're going to have more electric vehicles in play. We see Ford is definitely moving into that space, right? And we'll probably see some other alternatives come onto the market at some time also. We also see Tesla. Now, everybody loves Tesla, but Tesla as a company isn't really profitable. But people keep buying it. I don't think that can go on forever. But so you're asking me, how do I look at that situation? That's where I start. And then I start to work around that. All right. What about the Acorn app? Acorn app is fine. It invests your change. And then you usually do like some type of nominal investment or savings every month, $10, $20. I use my Acorn as kind of as a beefed up savings account, because you can then invest in different buckets. They'll have like a conservative bucket where they're investing into investments that don't or are not as volatile. They'll have a moderate bucket, and then they'll have an aggressive bucket. Aggressive bucket is trying to go for the fences, swing for the fences, right? Trying to hit a home run every time. That moderate bucket, just trying to kind of do singles and doubles. And, sorry for the baseball reference, but I use that often. If y'all don't understand the baseball references, let me know. And then the conservative bucket is they just trying to get on first base. They're just trying to, move the ball along. Nothing exciting, right? Because I know a lot of people don't like baseball because it's boring. But when it comes to your money, boring can oftentimes be very sexy. How you doing, Rich Money? That's a dope name, by the way. All right, so hold on. I think I saw some other comments on Facebook and YouTube. So why did the futures market crash again tonight? The futures market is crashing right now. We'll probably have the circuit breakers trip again tomorrow because people are panicking. And so people are selling off. And when you see panicking, people selling off during times like this, you see what they call safe haven assets. Safe haven assets, your yen, Japanese yen, your U.S. bonds, and also the yen to dollar bonds. I'm trying to think, and some of your blue chip stocks. Not always, but a lot of times people tend to run to them for safety. Oh, and gold. People will run to gold, the yen, and U.S. Treasury bonds. So you might see gold spike. I haven't looked at gold tonight, but markets are open all around the world, almost 24 hours a day, just about 24 hours a day, every day, 7 days a week. On Sunday, there's like a gap of a couple hours. That's why I say almost. But they are selling off over in the Asian markets right now. And so since they're selling off in the Asian markets, it's an indicator that as the markets open, they start in Asia, they move from Asia to Europe, and then from Europe to the United States at 9:30 in the morning. So they are anticipating that tomorrow is not going to be a pretty day. But guess what? If you created your watch list, like we've talked about before, we talked about it last week, tomorrow could be a great day to go shopping. All right. So let me work through a few more of these. And I said I wasn't staying on late with y'all. I'm already 25 minutes in. The service workers are going through layoffs. Yeah, a lot of them are because demand is down because a lot of these areas are being quarantined off. So you don't have people out in the mall shopping. I mean, the United States is a consumer-driven economy. Roughly 70% of the U.S. economy is based off people like you and I shopping out at the mall. 70% of that. So think about that. If people aren't buying, that's trouble. That is trouble. And that's why we're seeing these cuts in interest rates. That's why we're seeing the Fed Reserve reinstate QE or quantitative easing, basically, which means they're out buying government bonds to make sure there's enough cash in the system. Let's see. It's not the bottom, but some items there. Well, I don't know if it's the bottom. I never try to call the bottom. I never try to call the top. You can't time markets. Some people think they can. There's a couple of really, really special people out there that can do it, but they're like special. I just say get the profit. Get the profit and run. Buying stocks should be based on valuation of company. Dave said, let's see. Oh man, y'all got it's a lot of questions over here. I slept on this. All right. Chili said 740, FICO opens doors. Yeah, but again, as me and Robert talked about last week, that 740 doesn't always necessarily mean things. You can get stuff done sometimes at 500. So it's not always doom and gloom for everybody. Leonard Richardson, how are you? Lewis Jones, how are you? Media is having a ball because of uncertainty. Yes, they are. And guess what? Because of this uncertainty and because the eyeballs are still on media can still charge for their advertising. They can still charge for those commercials. So absolutely, brought some more Tesla. Man, you can keep that Tesla. I mean, listen, it's been a runaway, but the fundamentals on it are terrible. No problem, Mr. Mastery. Be sure to subscribe to my YouTube channel. What's happening? Are we in a recession? We just talked about that. Nobody knows if we're in a recession yet. Some people are guessing yes. I don't think we had a negative first quarter of 2020, and I don't think we had a negative fourth quarter of 2019. And what is a recession? A recession is 2 consecutive quarters of negative economic growth. All right. So basically, if we've been growing at, let's say, 3% a quarter, and the next quarter we're growing at 2%, and a quarter after that we're growing at 1.5%, that's a recession. Doesn't mean that we're not still growing though, right? It just means we may not be growing as fast. There are times, however, when we actually may not be growing at all and things can go negative. So, that's, so let's just say 4.0. What's 4.0? Help me out. Mr. Rand, any books to read for investment, or is it better to hire professional help? So here's my personal stance, right? I think your money is too important just to blindly give your money away to anybody to manage. And guess what industry I've been in for years? Money management. I think it's always good to have a handle on what you're paying people to do, right? So even if you have a mechanic, because I hear people say this, hire professionals, and I agree. But when it comes to your money, I think you should at least have an understanding of what's going on so you don't get Madoffed, or you don't get Enron, or you don't get WorldCom. And all of those are basically scandalous situations where people got, caught up into somebody's Ponzi scheme or somebody's wrongdoings. And most people, most time, weren't sophisticated enough. Their financial IQ wasn't high enough, and then they got. And it doesn't mean that if you know things about the markets and you know things about finance, that you can't get robbed. My belief is the probability is lower. So any books to read for investment, I would say The Intelligent Investor by Graham. I would say there's two books by Peter Lynch. I can't think of their names off the top of my head. I would say read both of those books. Bogle. Bogle was the founder of Vanguard. Can't think of his first name either. I'm tired, y'all. Bogle has a good book talking about indexing and mutual funds. It kind of talks about Vanguard. That's a good book. There's also a book, I want to say it's called The Little Red Book of Investing. So I would check those out as well. But circle back around with me and ask me that question. Email me or inbox me or text me. I tell people to text me all the time. You can text me at 484-278-1357. Again, 484-278-1357. Hashtag Ask Kamari, because everybody knows every Wednesday I do Ask Kamari. Last week it was on Thursday, but every week I do Ask Kamari on Wednesday, 7 p.m. And you can send me any questions or any other book recommendations, and I will talk about it on Wednesday as well when I go live. So let me just get through a couple of these comments, and I'm going to jump off. So any books to read? Chili says, Apple has plenty of cash. Building new campuses and awesome. Yeah, Apple generates over $1 billion a month in cash flow. $1 billion with a B. That good old infamous B word. $1 billion every month. So yeah, I don't have a problem with Apple. You've seen Apple fall. Apple's been on sale. I think Apple will be just fine. A good company has 5-year good track record. Yes and no. Yes and no. We saw some IPOs that came out this year, like Levi's, and there's another one, right? But it was a well-established business, and they might not have a public track record, but they're a good company, been around for quite some time. Just to remind everybody, this show is for education and entertainment purposes only. Education and entertainment purposes only. Anytime you are thinking about buying an investment, consult with your investment tax advisor. Past performance is not an indication of future results. So I have to tell people that, because I tell y'all, don't be trying to sue me because I'm just sharing ideas with y'all, right? Don't go buy no stock based off of what I or any of these other social media dudes tell you. Do your research, folks. Do your homework. When people get over trusting, that's when people get ripped off. So it's okay to trust, but you know how they say, trust but verify. So have you heard of Okada Tech? Not off the top of my head. And then Chile says AT&T is better than Verizon. I don't know. I don't know if I would make that claim. I use AT&T. I have AT&T. AT&T and Verizon both have great dividends. Both of them are actually in the content space right now. So they're not just cellular. They're not just landline phones. And they're both going to be making a play for 5G. And so when 5G really gets going, the leader or the better positioned company will be the one that will come out on top on that one. Go CP&G. Yes, good evening, everyone. Stay level-headed. Amen to that. Yes. Everyone, please stay level-headed. Hey, John. All is well, sir. And congratulations on starting your portfolio. John inboxed me and he started to buy some stocks. No, we're not in the second quarter yet. It's only March. The second quarter ends at the end of this month. Excuse me, first quarter ends at the end of this month. So, all right, let me go back to, all right, so I Deliver Beauty has a question over on IG. My mother-in-law passed away. I'm sorry to hear that. And I think a USD, okay, you got a USDA loan with a payoff of $58K on her home. And we went to check about refinancing. They said we could go off of the value now. Yeah, so it sounds like you might have to get a new appraisal. The payoff of the loan is $58,000. I'm not a mortgage person. I've only learned about mortgage stuff via my clients. I live vicariously through my clients by doing their stuff. All right, so now you need to get a reappraisal to see what the value of the home is, and talk to Robert if he's on. Check in with I Deliver Beauty. But yeah, you need to get a new appraisal, because then that'll tell you what the home is actually worth, and then you can see what kind of percentage of loan to value that you're going for. Detroit CEO, how are you? Davette Anderson, how are you? You like Microsoft? Yeah, I like Microsoft too. Microsoft's not going anywhere. People don't realize that Microsoft Office still makes a lot of money, a whole lot of money. Dave Anderson, Business Bully, how are you, sir? Mayor of Malibu, how are you? Sam Ra, how are you? Nicolette, how are you? Oops. So Melanation says, I'm clueless to the futures market. Can you give a brief summary of how it works and how important it can be? The futures market is the future. What's a future, right? A future is a contract to buy or sell something at a later date. All right. You have futures on everything. You have futures on commodities like coffee beans, soybeans, pork bellies. Anybody watch Trading Places? Anybody remember that? Any of those things, that is a commodity. And then so you buy a contract on those. So I'm sorry, I was trying to read the whole question. And can that be used when doing our own? I wouldn't really be doing research off of commodities or off of futures contracts. Again, futures contracts are kind of like an indication of what's going to happen, like the next day. And then, there are futures contracts on stocks. There are futures contracts on coffee. There's futures contracts on pork bellies, but I wouldn't start anyone there. That is definitely an advanced topic. Markets move very fast. You need a lot of money to get into futures. Well, I won't say a lot, but you need a good amount of money to get in futures contracts. I would start with stocks. So I have a whole video list of people that want to get started in stocks. You can start investing in stock for as low as $1. I bought $10 worth of Amazon, right? So Amazon is trading at 17 something right there, right? 1,700, not $17, 1,700. I bought $10 worth. Now, Amazon went up 3%. I bought it in November. I just checked it like 2 days ago. Amazon went up 3%. Guess what? My $10 went up by 3% from November. So, but if anybody wants that list that I was telling you about, just DM me or inbox me and tell me that you want a list. A string of videos that helps people get started in the stock market. And I'm getting, I'm getting bad reception on my IG. And yes, Trading Places with Eddie Murphy. So let's see, any more questions? Trucking Balls, I Am Bree, Black Urban Beauty, Trey Snatch, what's up, brother? Good stocks to buy. Good stocks to buy. I say anything that you already buy. I got a bunch of Apple products. This is my old phone. I got an iPad. I think I bought like $1 of Apple. I told you I bought $10 of Amazon. I'm on Amazon buying stuff all the time. I tell everybody that if you're brand new, you don't know what to do, start with what you know. Buy what you like. If you like Nikes, if you own a pair of Jordans and you don't own Nike stocks, you should own a Nike stock, at least one. Jordans, from anywhere from $200 to $250. Sometimes more, especially when you get to the collector's edition. That's when we're talking about money. But if not, if you go to Target a lot, buy Target. If you go to Whole Foods a lot, buy Amazon. Amazon bought Whole Foods. All right. Achievement. How are you, sir? This is a good time to buy or refi cars, mortgages, and get credit cards due to the moves the government made today. Potentially. Des, I will share that list. It's on my YouTube channel. Yes, I think so. I think so. If you are in position to do it, refi a car. I'm not super big on refining depreciating assets. It can be good, right? Sometimes, but a lot of times you can just pay those things off. A lot of times, if you're not in a position to do it, and it makes sense, and you don't get hit with a whole bunch of fees, because a lot of times I see people getting hit with a whole bunch of fees when they try to refinance cars and things like that. But you really got to do the homework. My YouTube channel handle is youtube.com/Kamari Ellis. Kamari is spelled CAMARIELLIS. All right. Everyone else can see that. Oops, I got too many banners open. Okay, again, youtube.com, Gato. How are you, Gato? I haven't seen you in a while, bro. YouTube handle is youtube.com, Kamari Ellis, CAMARI. All right, and let's see, do we have any more questions? You got 5 minutes. I'm getting off in 5 minutes. So I'll take the last couple of questions. Trying to think. Okay, here's one. Al Bogan. What thinking investing in the Tulsa Real Estate Fund founded Jay Morrison? So if you read the prospectus, and it's all out there, I would not be an investor in Tulsa. The management fee is high. I know everybody's been in a rave about them saying they won't be declaring any dividends and they won't be doing any redemptions. And that's what happens in those type of investments. When you lock money up into investments like real estate, it's a long-term play. You can't just liquidate real estate. So, it takes some time to liquidate something like that. But, what do I think about it? I personally wouldn't do it. I know a lot of people that have done it. But that's just because of where I'm at in my life right now and what I'm looking to do. So Chili said, no, it's also fun. But I mean, I will say this, right? Just to be clear, because 99% of my audience is Black. 99% of my audience lives in or is connected to an area that is being gentrified. And so the way you stop gentrification is by buying your area, period, point blank. We can sit and complain about gentrification all day long, but guess what? We have the same opportunities to buy those properties as anyone else. However, oftentimes we won't pool our money. And if you think about wealth and you think about the institutions that promote and keep wealth healthy or capitalism healthy, it's things like insurance, it's things like the banks, it's things like private equity or hedge funds. All of those things are some form of group economics or cooperative economics. We can do the same thing. And so what Mr. Morrison did with the Tulsa Fund is a form of cooperative economics, group economics. You can do that. You can do that on your own. Get 10 people. Put y'all money together, save it up, and rock out and buy the property in your communities if that's something that you're interested in. All right, so it's not rocket science, folks. It's really not. But if that's what you want to do, then that's what you want to do. And guess what? Group economics makes it better for everybody else, right? So everybody can share in the profits. D. Elliman said, glad to see me live. Thank you for being here. Thank you for being here. Tilly says Microsoft has a great business model for cloud play. I own it. Yeah, everybody thinks about Amazon when it comes to cloud. Microsoft is a major player in the cloud as well. Major player. The top three are Amazon, and I'm not sure what position, but I know it's Amazon, Google, and Microsoft. So you can't go wrong with that. What is a wash sale? All right, wash sale. A wash sale is when you sell a security or a stock and you try to buy it back within the next 30 days. So the IRS looks or frowns upon that. They don't want you doing that. What people do to get around it is, let's say you brought Microsoft, and then you sold Microsoft, and then you can't buy Microsoft again for another 30 days. What you could do is you could buy an ETF that holds Microsoft as kind of a workaround. I hope I didn't lose anybody with that, because I know that's a little technical. But we can talk a little bit offline about that, John. But you shouldn't really be having any wash sell problems, because from what we talked about, you're all long-term. All your stuff is long-term holds. Buy anything you can do without. I would agree with that, especially as a start, right? So again, when I talk about the markets, when I talk about stocks, it's for people that are beginners, that have never touched the market before. And I'm just kind of like a guide to get you going. Because again, we're going to talk about community demographics. We're going to talk about race, right? A lot of times black folks, I'm black, right? Most of my people are black. We don't invest in the stock market. Why? Because we're afraid of it. Because we can't touch it, we can't feel it, we can't smell it. But guess what? The stock market tends to deliver a greater return than just about every other investment outside of business, right? Outside of business. So let's see. I don't know if I saw this already. What books do you recommend to understand the math of the stock markets? I don't recommend any books to understand the math of the stock markets. The math of the stock market isn't really hard. Give me another question, a follow-up question on that, so I can make sure that I'm answering what you're speaking to, because the math's not hard, right? If you buy something that's $100, and then the next day it closes at $101, you made a 1% profit. And then you made $1, right? Then you can also multiply that dollar in profit across as many shares as you may have. So the math isn't really hard, but I don't want to, because they say that the curse of knowledge, right? Because I've been doing this for over 20 years. So sometimes I might not be thinking of a thing in the same way that you are, and I don't want to invalidate your question. So if you drive that down a little bit deeper so I can give you a better answer. I don't feel that that's a great answer. Comcast, I'm thinking about buying. Comcast is cool. They're a monopoly, right? They're the biggest cable company in the country. I don't think you can go wrong with them. They're not going to give you explosive growth, though. So going back to IG, Achievement asks, so a mortgage is a better move out of the three if you're in position. So I tell this to everybody. There are no cookie cutter solutions. It really depends. Whether you have a mortgage and you have mortgage refi and auto loan refinance. Again, it really depends. It really depends. Melanation says, thanks for the Nike Jordan post. That thing was clutch. Hey, I got a couple more in the bag too. I just haven't done them yet. You reposted that? Oh, thank you. Thank you so much. A lot of people needed to hear that. Cool. Thank you. Thank you. Thank you. Richard, why you give me the eyes like that? Did I say something wrong? Omar, what's up, Omar? How you been? Gato, what was your question? And I think it is time for me to go. I think I'm over my time. Buy the block. Wish I could. You can buy the block. Get some people together with you and go on the block. If you want to talk deeper about it with me, we can do it too. It's not that hard though. I mean, you literally. So here's the thing. If you and your friends, let's say you got 5 friends, just to keep the math simple, and y'all want to buy the block, put in $20 a paycheck, and let's say you get paid every month. So 5 of your friends are putting $20 every paycheck. That's $100. That's $200 every month, roughly, right? So over time, over your first year, that's roughly $2,400. You could potentially put a down payment on something with that. And again, this is just for illustration purposes. You can ratchet up or down the investment any way you like. You might have some people that put in $10,000 as one lump sum payment, and everybody else pays $100 a month, so they get to that $10,000. That's called how you want to capitalize your business. But everybody can do that, and so you could have all these little small cells of groups buying up property in their areas, hopefully using the labor and the skills of the people in that area, right? So we can make the money flip. You know, people talk about how often a dollar stays in the Black community. I talk about how often it flips, right? So again, but you know, y'all gotta have trust, right? You should have a partnership, put everything down on paper. But again, trust, deepen those relationships. We don't put enough equity. We don't put enough emphasis on relationship capital, because they gotta be people that you trust, people that you have common value with, people that you have a shared value with. You're kind of on the same page. You might not be able to find them all right away, right? Tenacious Bastard, how are you? That's actually a dope name, by the way. But you know, the thing is trying to find those people that will work with you. Now, sadly, going back to Tulsa, right? Part of the issue is a lot of people don't really understand how that fund works. And I'm sure there's probably people that are asking for their money back and didn't read all the documents, didn't read all the legalese. And, you know, now some people are upset. But it's still a business, it's still a fund, and it has to run that way. So I get it. I mean, I worked in institutional investing. So, I get it. I get it. Not in Los Angeles, that will not buy a doorknob. Well, remember, DR said, you know, you can fluctuate those numbers whatever way you need to. I mean, the other thing y'all could do as a group, right? Because we can be creative. Like, don't let money stop you. Money never stopped anybody from making money. I'm gonna say that again. Not having money never stopped anybody from making money. Lack of creativity is what stopped people from having money. I have sold stuff everywhere at vending places, from water to fried chicken. My fried chicken is probably the best in the world. My salmon might be number 2 in the world. But you know, you can, if you're good at something and you can sell it, you can do it. Just be creative with it, right? I mean, another idea or opportunity for some people who might not have a whole lot of money. There's a lot of real estate investors that are out in the market right now who are flush with cash, and they are looking. I just went live with dead. They're flush with cash, and they're looking for deals. Your group, y'all can start wholesaling. That could be your seed capital. Y'all go identify the properties, lock them up under contract, and then reassign the deal to a seller at closing and make money on that. So you can do it, and I'm not. It's easier said than done. It is work, right? But if you're not willing to do work and you're not willing to think, I'm not the guy for you. Sorry, I some things I just can't negotiate on. I'm not the guy for you. But you know, if you want to work and you can be creative, go for it. And also, you might be creative, but you might not have the guts to execute on that creation. So you got to have the guts to execute on that creation as well. That's all I got to say. I told y'all 5 minutes. It's been longer than 5 minutes. But thank you for everybody that joined tonight. If you got value from this, share it with someone else. Share it with somebody else who needs help with increasing their financial IQ. I'm here. I'm sure I'll be back here tomorrow. Don't forget, Wednesday, 7 p.m., the Ask Amari section of the Finance Rebel Show. 2 more people jumped in, so I'm going to hit these. That makes sense. Folks are doing it right. Yeah, you can do anything. Listen, get y'all group together and y'all buy a pack of water. It never rains in Southern California, right? So people might be thirsty. Market's probably going to drop 20% tomorrow. Markets aren't going to drop 20% tomorrow. Michael, you know that the circuit breakers are going to trip. But I think the markets are definitely going to get smacked around tomorrow. 20% tomorrow probably going to get shut down. Yeah. These are the times that try, man. So absolutely, you are right about that. And I'll say this last thing in closing. Investing is very much an emotional process, just like anything else with your money. Anytime you get money involved, you will have emotions and feelings involved. The stock market is probably the greatest reflection of human being emotion ever, because you see people at their highs and you see people at their lows. You see people when they're fearful, you see people when they're greedy, and you get to witness that every day on the stock market. As an investor, you have to think about that, and you have to be in tune with who you are and how you work and how you operate. And you don't want to just get into something just to make money without really figuring out who you are. For one example, and then I'm going. I'm 5'9" on a good day. If I decide to go after a career as a basketball player on a professional level, what's the likelihood I'm going to get picked up? Now, Muggsy Bogues was a bad dude. He was like 5'4", and he could slam. But I don't have those kind of hops either. And I'm a little overweight. So we got some work to do, right? So that probably is, if I'm being honest with myself, having a career in the NBA or a successful career in the NBA probably isn't likely. But could I manage the NBA players' money? Absolutely. I never market myself to them, so I'm not trying. But my point is that something I could do? I could, if I was really interested in the sport, I probably could even be a broadcaster potentially for some of those type events and arenas at the high school level, at the college level. They all get paid, or a lot of them get paid. Could I be a referee? Maybe. I've had some college level referees and they make good money. I've had some WNBA referees and they make good money. Well over 6 figures. I could probably do that. But me playing as an NBA guard at 5'9", when most of the guards are like 6'4", not going to happen. Not going to happen. So listen, I've been here for a while. Think about what I just said. Make sure you get in alignment before you start investing. And start slow. Don't try to invest everything you got. Don't try to invest your whole nest egg. You can start with $1. If you don't want to start with $1, you can start with 10. If you don't want to start with 10, start with 25. All right, well, just do it steady, slow and steady, and be consistent with it. All right? But I'm Kamari Ellis. This is the Finance Rebel Show. I'll be back tomorrow. Same Rebel time, same Rebel channel. Have a great night, everybody. Thanks for joining. Bye-bye.